Okay, welcome back. We are episode 4 of the Eric Z podcast, and my name is Eric Zamora. A little bit about me: I'm with Rennie and Associates Realty. So over at Rennie, we have our new development project marketing side, as well as our brokerage, which houses, I think, over 270 agents now and growing. And I am a full-time realtor there, and I also am involved in project sales as well. So enough about me. I am super excited. Very dear friend. I think we've known each other. We were just talking about this almost 20 years now. We'll get into that story of how we met too, which I think is kind of cool. Welcome to the show, Dara Fahy.
Thank you very much. Really, really happy to be here. Thanks for having me.
Awesome. So, for those meeting Dara here today, he is a full-time mortgage broker with what's the name?
Citywide Mortgage Services.
Citywide Mortgage Services. So, before we get into that, because we have lots of good stuff to talk about, what can you tell us about before you got involved in mortgages? What was your life like professionally, personally, where you grew up? Who is Dara Fahy?
Good question. I don't think many people grow up dreaming of being a mortgage broker. So it's just something that kind of I fell backwards into, and it's become a great thing for me, and something I really enjoy. I was actually a business student. Typical student working in food industry and service industry, restaurants and things like that, studying my business administration degree. And, I just got a little tired of working nights and thought to myself, what could I do that's going to complement my studies that will not have me working all night and tired every day trying to do schoolwork and things like that. So
how long were you doing that for? This is a restaurant industry.
Throughout most of high school and college. To be
Okay.
honest, or first half of college. Anyways, that led me to the banks. I just thought that working in a bank would be a good complement to the studies. Like I said, it'd give me nice banker hours and be able to get some schoolwork done on the weekends and evenings, things like that, and party a little bit. So
Yeah.
I ended up working for the Royal Bank for many years. And, that was just sort of a natural transition. That was actually probably the best schooling I could get, was working in the bank for a lead into finance and mortgage business. And, in 2006, I decided I wanted to be independent. I was still pretty young and able to take some risks, and decided to become a full-time broker and have some more options for my clients and things like that. So, and then it's just been a natural progression like that.
Okay. So how long have you been doing mortgages then?
I was with the Royal Bank until 2006 for several years. And so I've basically been an independent broker since 2006.
Okay.
I was with Citywide as a broker from then on, and in 2012 I became a partner in the firm. So we're going on close to 20 years.
Wow. That's incredible. So 20 years of experience. That's definitely valuable to your clients. I think the biggest question, probably everybody that's listening today, is the biggest topic, the hottest topic that's been on the headlines, which is interest rates. I think having you here, it would be very insightful to hear your take on it. And also if you can provide a summary of what exactly has been happening, and sort of a recap in terms of how it's impacted us as an economy, as consumers.
Absolutely. Well, things have escalated quickly in the past 18 months. So we've seen interest rates actually triple from this time, early 2022.
Okay.
They're the highest they've been for 20 years. It's impacting people in a major way. Anyone with a floating rate or variable rate mortgage is feeling a lot of payment shock right now.
Okay.
Probably to the tune of 40% what it was, 18 months ago. Those with a fixed rate mortgage are protected, but for how long is the question, because they're going to experience some pretty major payment shock when their mortgages come up for renewal. So, yeah, I would say it's uncomfortable. It's causing some pain. Unfortunately, I think we stay here for a while.
stay at this current?
Yeah, current levels, maybe even a little higher. It wouldn't shock me to get another increase of a 0.25% or two. We just saw the U.S. do it last week. There's been a lot of economists predicting we would see this reverse and see rates start to come back down. Originally, those predictions were towards the end of this year. Based on what we're seeing, I don't see that happening, unfortunately. If I had to guess, I think we stay at these levels at least until 2025. And, at some point, we'll hopefully get some relief and, start to see those come down. But it's hard to say. And the issue is that you can look at the data till you're blue in the face, but it still becomes very difficult to predict. We've seen it, 6 months ago, they told us that was it. No more increases. And here we are, we've seen 2 increases since.
June was, was it June? June was a bit of a surprise.
June was a surprise, yeah.
It was like 50-50 chance, I guess.
Yeah,
right?
And they've indicated they've left the door open for more hikes. So I think, we have to ignore the data, look around what's going on around us. And I mean, you tell me, I don't know what you're seeing. I see people still spending a lot of money.
Yeah.
If anyone wants a job, they can have one.
Restaurants are very full.
Restaurants are very full. Travel is expensive.
Yeah. So if you say that there's potentially twice that it could happen, 1 to 2 raises happening, do you see that sometime in the short term, or do you see that sometime in like 2024?
I see that in the short term.
Okay.
And again, this is just my very basic and raw analysis of it. But when we see these restaurants full, we see travel is expensive and people are spending money very aggressively.
Everyone's in Italy, right?
Everyone's in Italy. Yeah. Everyone, as I said, everyone that wants a job can have one. Our job market is extremely strong.
Right.
That to me indicates we're in for a couple more increases. There's going to have to be some pain before they back off. And I think we're going to have to see a point where people are like, okay, time to tighten up a little bit. This is getting comfortable. And I know some people are going through that, but I don't think enough. And that's, again, some personal basic analysis.
Yeah, interesting. Okay, so definitely will be interesting to see what happens in September. Seems like we don't really know just yet, but probably when more of the inflation numbers are coming out.
The recent inflation data has actually been positive. There's been some positive action there in terms of it decreasing a little bit. So you never know. Maybe we get another round of positive data. The next increase is until September. So very good chance we get some more positive data, and in between now and then, maybe they leave it. Maybe we sit here for a while. That would be great. That would be a great result, in my opinion. That's a win. But I think there's a very decent chance we get another 0.25% increase, possibly 2.
Okay, awesome. So as a mortgage broker, there's certainly more to just doing pre-approvals, doing rate holds, and whatnot. I've been working with you for so many years now, and I can see that everybody's situation is different. So, I find that your expertise helps with creating different strategies for certain clients, certain situations, and whatnot. So I wanted to touch upon maybe a couple of those strategies that, we may not necessarily know so much about because the information is not readily available unless you really researched into it. So the first one I was going to talk about was equity in your home, and how we always hear about utilizing that equity in your home towards, say, another investment, or what would be the other purposes that you would do that, and how does that process work even? Like if you tell me like as if I have no idea how this works, like how would you explain that?
Great question. And you know what, I think that is something that people aren't completely aware of, what you can do with that equity. If anyone who's bought a home in the last 10 years, as you know, is probably sitting on a good chunk of equity, and that's great on paper. It's great to boost your net worth and to feel good.
Yeah.
But at the end of the day, until you sell, it's not working for you, right?
Sure. And what is equity?
Well, equity is the amount of ownership that you have of your property, and by that I mean your value of your home. Let's just say it's $1 million. You owe $500,000 to the bank.
Okay.
$500,000 that you don't owe is free and clear. That is your equity in your home. So there is absolutely ways that you can put that to work for you. As I mentioned, if you're just sitting on it, it's not working for you. It's a paper gain, which is great, but there are ways to put that to work for you. So how it works is the government will allow you to borrow up to 80% of the value of your home.
So the amount that's over and above what you still owe?
Correct. Exactly. So using that example of $1 million value,
Sure.
$500,000 mortgage, 80% of $1 million is $800,000.
Okay.
So someone in that scenario has $300,000 of potentially accessible equity, subject to qualification and things like that, obviously, but potentially $300,000 that they could access, put that to work for them. And to answer your question, it can be used for anything. Some great ways would be to purchase more property, as you're very well versed with, investment properties that create income.
Okay.
And we see some equity gain there.
How put it towards like a pre-sale?
Absolutely.
You want to use it towards deposits?
Absolutely. And I love that strategy, by the way. We could talk more about that. But yes, pre-sales are great. Existing condo, existing home, and existing real estate of any kind. You could also use it for other kinds of investments.
Such as
stocks.
Okay.
Mutual funds, things of that nature. In theory, you could use it to consolidate debt as a great, for people obviously that maybe are feeling that high interest rate pinch right now and are getting into some consumer debt. We can use it to consolidate that and bring their cost down. You could take it to Vegas and gamble it all the way if you wanted to. There's no restriction on what you can do with that equity. That wouldn't be wise, just for the record. But lots of things you can do with it, and there's really no restrictions as long as you qualify.
So you take just so everyone's clear on how that process works. When you take that 300,000, let's just say, so you take that 300,000 and spend it on the investment. What happens to that 300,000 that they just gave you? That's yours, and you don't have to do anything with it. No paying it back, nothing like that.
You're paying it back. You are paying it back just like a regular mortgage.
Okay,
right.
So everyone's clear on how that
works.
Yeah.
No, that's an important point. You are paying it back. You do owe it. So I think for that reason, that's why we don't want to see people take it to Vegas.
Yeah. Okay.
We want to see people make a wise investment with it, something that's going to generate further gains and income.
Okay.
And that interest that you pay on that 300,000 is a tax deduction against any income and gains you can generate.
Okay.
So there's some tax efficient strategies that we can do to offset the cost of borrowing that money,
right?
And make it really as efficient as possible. And that's the big thing I think with mortgage planning is making sure what is your plan.
Right.
We see it all, and we want to make sure what we do for people fits. It's whether you're a first time buyer and you're purchasing a condo as a stepping stone towards a townhouse or a house later. Great. We want to look at that big picture. If you're trying to accumulate a portfolio of investment properties,
okay,
there's certain products that fit that a little better than others. So we want to look at that overall plan and really make sure that people are getting the right strategy in place.
Okay. So the other question I had was onto that, just so everyone has a really deep understanding of how that works, is that let's say the 500,000 mortgage you had left, you would still have that intact, but then there would be another $300,000 mortgage under your profile at whatever bank you are, and then you would have another mortgage payment for that amount specifically, or how does it work? Do they lump it all together? Like, how would that picture look?
That's a great question. So there's a lot of answers to that, and a lot of moving parts because every bank is different.
Okay.
In a perfect world, for that person accessing that 300,000 for, say, an investment property, it would be ideal to keep it compartmentalized for tax purposes.
Okay.
And there's banks and products that will allow for that. So using that example, the 500,000 mortgage stays exactly as is.
Okay.
We do a separate $300,000 segment or even a home equity line of credit, but it's completely separate from that original 500,000.
I see.
Nice and tidy for tax purposes.
Got it.
Some banks don't offer that. Some banks would give the 300,000 at current rates and blend it all together, lump it all together, as you said.
Oh, I see.
So, and that's, so to give you an illustration, as I mentioned, someone wanting to consolidate some debt, well, they don't need to keep it compartmentalized for tax purposes. Okay to lump it all together. So that product might be a fit for that situation. Whereas someone purchasing some properties and wanting to keep it tidy and boxed, we maybe look at like a Scotiabank or something that'll allow you to break it up like that.
Okay. And Scotiabank is one of the banks that you deal with.
They are, absolutely.
Wow.
Yeah.
Call Dara for all his services. Okay. So that's great. So we we got some really good insight into that. Another topic I was wondering about that I think everyone would wonder about too is reverse mortgages.
Mm-hmm.
What does that even mean?
Yeah, great question. So a reverse mortgage is an interesting product. They got a bit of a bad rap, I believe, in the 80s. And I think people tend to have a little bit of a negative connotation with reverse mortgage. Back in the 80s, there was some companies, specifically in the US, I think, that were doing some predatory stuff that, the intention was to foreclose and take over someone's home.
Oh.
So they got a bit of a bad rap, but the product has come a long way.
Uh-huh.
And there's some really great reverse mortgage product offerings these days. Basically what it is it's just like a regular mortgage. You have a bunch of equity in your home. It's geared towards people at a later stage in life, like seniors.
So there's nothing left owing on the property.
Yeah, that's
kind of situation.
Yeah, it doesn't have to be nothing owing, but
Okay.
that's kind of an ideal scenario, and we'll use that as an example.
Okay.
You own the same home, $1 million, you own nothing. You're age 65 and you are retired. Maybe you don't have the same income level that you used to, but you need money to live. So someone in that scenario could take out a reverse mortgage, and it's set up the same as a regular mortgage, where they lend you, say, $500,000. It's registered on the title like a normal mortgage. However, payments are completely optional.
Okay.
So if someone elects to not make payments because their income is a little bit lower in retirement, say, what happens is the interest will accrue in the background.
Oh, I see.
Now that's the con of the whole situation that might not be a fit for everyone. And I'll give you an example. If someone has a big family and lots of kids, and they're really intent on leaving their equity in their home to their estate, to their kids to enjoy when they're gone, a reverse mortgage with interest compounding in the background could pile up very quickly over time and erode that nest egg to be left behind. So for someone in that scenario, maybe not a great fit, because their primary objective is to leave for their next kin and their children. Someone, for example, with maybe just no kids or one kid, or is not concerned because they have other assets to leave behind, a reverse mortgage is a great product to get a bunch of money in their pocket, and they have no obligation to make a payment on it. They can literally sit back until they die or until they sell or go into a home. So that's great. I mean, improving the quality of life. They want to travel. Maybe they want to help their kids get into the market.
Okay.
That's a great way for them to get some money to be able to gift to their kids, but not have to make any payments on it and service the debt.
Right.
So things like that. The reverse mortgage can be very handy for certain situations, not for everybody.
Okay. Got it. So the last one I was going to cover was, you always hear these terms quite often. So you hear A lending, B lending, private lending.
Mm-hmm.
What's the difference between all those, and why does somebody use either of those for what reasons?
Great question. So A lending, I would refer to A lending as basically bank lending.
Okay.
This is, you need a mortgage, you're going to a bank or a credit union.
Like an RBC.
Like an RBC,
Something like that.
a Scotiabank, a Blue Shore, Credit Union, Bad City. You're getting the best rate available.
Okay.
Your credit has to meet certain requirements. You have to qualify based on your income, and you fit into that bank box. You're getting the best rates. That is sort of what I would call A lending.
Okay.
Then we have B lending. B lending would be what I call alternative lending, which are non-bank companies. Some credit unions participate in B programs. We have trust companies like Home Trust, Equitable Trust, and they do not fall under the Bank Act. They're not going to have to follow as strict guidelines to qualify you.
Oh, I see.
So for someone that, say, is self-employed and makes a lot of money, but they are using a lot of good tax strategies to make it look like they don't earn as much money on paper and avoid taxes, they may not fit the bank model
because of the bank's requirement.
Because of the tax returns not being a true reflection of what they're earning, for example, right?
I see.
So someone like that might want to take advantage of an alternative lender where they won't look at the tax returns, personal tax returns, like a bank would. Maybe they'll look at the company and their earnings. They'll take a bit more of a common sense, bird's eye view, look at the whole thing and be flexible. The downside of that is the rates are a little higher.
Okay. Like significantly higher?
Not B. A to B is about probably a 1.5 difference. So if you're paying 6%, which is about the average 3-year term right now with a bank,
yes,
you're probably paying 7.5 to be in that alternative channel.
Oh, interesting.
Yeah.
Okay.
And that can hurt a little. However, again, going back to the strategy thing, if there's one time that it's not so bad to be paying a high interest rate, it's when you're purchasing investments, right? Because as I mentioned, that interest that you're paying to acquire say a condo as an investment or a house is a tax deduction against the rental income. Okay. So again, if there's one time it's okay to pay a high rate, it's there because at least it's going to lessen your tax bill on the income that you receive on that purchase.
Yeah, it's interesting to hear that about the percentage difference, because I feel like some might think B lending is way higher than that, way higher than 1.5% difference. So it's good to hear that it's. I thought it would be like 2 to 3%.
Yeah, no, the spread between A and B is not so big. The spread between B and fully private is bigger.
Okay. So how does that work?
As I mentioned, you have banks that they want you to fit into their box. You have B lender that's going to be a little more flexible. A C lender is like a private lender, and there's many companies in Vancouver that do this sort of thing. They're more equity based. They're not so concerned about your credit at all or income. I mean, they will take a look at those kind of things and underwrite them, so to speak, to make sure that it fits somewhat of a guideline, but it's very loose and it's mostly based on equity in the home.
Oh, okay.
They're lending they're assessing risk based on the property. So that kind of lending is quite a bit more expensive. At the moment you're talking 10% and up. There's a lot of fees involved. It's very expensive.
Yes.
We don't want to be putting people into situations like that for long term. We use those for what I call bridge financing. Short-term, temporary situations. Maybe someone's needs to close on a property and they're going to sell theirs, but they don't have time to do it. So we just need money for 3 months to bridge their gap. Or someone is in a lot of debt, consumer debt, and they've got creditors breathing down their neck. They're going to sell their home, but they have to do some work to it first. But in the meantime, they can't wait for that money. Those are the kind of situations where we would look at a completely private loan at a very high rate, ideally with a good exit strategy, so that we're make sure it's a short-term solution, and we have a long-term fix.
And how does somebody meet a private lender? Is that only through a mortgage broker?
Typically, broker channel only. Yes. So if you were to call many of the private lenders in Vancouver, they're gonna refer you to a broker too. So they generally will only accept applications from brokers.
I see. Okay. Do you do a lot of private lending transactions, or do you find that that's lesser on the lesser?
We're doing a ton more than ever at the moment.
Oh, wow.
I guess that's a result of the environment we're in.
Okay.
What's happening right now with the rates being so high is people are also qualifying for a lot less, and I'm sure you're probably seeing this out there. When you go to the banks, they use something called a stress test, as you know, where they test you at a rate that's higher than the rate you're actually getting in order to be sure you can withstand more rate increases. That stress test is 8.5% right now.
Oh, wow.
So if I had to guess, I would say that someone probably qualifies for 40% less than they did 18 months ago because of that stress test going up. So we are having to go to B and private lenders a lot more right now because so much stuff does not fit with the banks, unfortunately.
Wow. Yeah, that's all really, really good to know. So you're at Citywide. Have you been there since you started?
Yes, joined 2006, became a partner in 2012, and been there ever since.
Oh, you're a partner of the firm.
Correct.
Okay, so at that time you had started it with a few other partners.
I didn't. I was not a founder. It was actually founded, I think, in 2002.
Okay.
Anyway, don't quote me on that.
I won't hold you to it.
Yeah, it's been a long time, but we have Sean Zapersky and Wayne Ma were the founders of Citywide, and I joined as a broker.
Okay.
And then became a partner in 2012 with another fellow. So there's four owners now, and we have about 30 agents.
Okay.
So, but I'm very much an active broker. That is my role. We have a managing broker who takes care of the business and mentors brokers and all the things like that. My primary role is to help people get mortgages and take care of my clients.
Right. Okay. And you have a team.
I do.
Okay.
I do, yeah.
And how many is on your team?
There was just two of us at the moment, actually. So I have an underwriting partner, Jenna.
Okay.
Who absolutely phenomenal. Couldn't do this without her.
Yeah.
And she was formerly in management with a lender.
Okay.
So she works with me to handle the internal side of things, all the underwriting of files, packaging, submission. She's absolutely phenomenal at giving things their best chance to be approved. So she handles that part of things, whereas I handle the client side of things, giving me the advice, the guidance, making sure that we're putting people in a product that's the right fit for that strategy going forward and things like that.
Right. So yeah, it's so refreshing to hear all of your success so far. I always like to see, your road to get here. And can you tell us about any challenges along the way? Maybe like a really tough deal that you worked on that was really stressful down to the wire. Have you had situations where that you can think of that maybe it was like a learning experience or just even an unexpected sort of occurrence that happened while you were working on a particular deal?
Absolutely. I have one like that in June that I think took 5 years off my life, to be honest. It's, I think what people need to know is that it's tough to get money. It's tough to borrow money these days.
Right.
When I started this job in 2006, it was very, very easy to get people a mortgage.
Yes.
It's like, you have a pulse and we can verify you're you. Here you go. It's gotten very tough, and I think that's a result of our real estate market being so strong, and
yes,
the government constantly wanting to curtail prices to keep it affordable for people, which we obviously appreciate, but it's made my job very tough.
Right.
Back in the 2010, or maybe it was earlier than that, they cut amortizations down. Amortization is the life of a mortgage, or the pace you can repay a mortgage. It used to be 40 years. So you could spread a mortgage over 40 years and have a nice little payment. They cut it down to 35. Then they cut it down to 30.
Right.
Then they introduced the stress test.
Yes.
Then they said, hey, 20% down only over $1 million. So if, you used to be able to buy a home over $1 million with as little as 5 or 10% down. Can't do that anymore. If you buy something over $1 million, as you have to put 20% down. It's just been constant restriction after hurdle after hurdle. And I understand why, but it's made my this job a lot tougher, for sure. So I think brokers are, crucial more than ever to buyers to help them navigate that.
Yeah.
And to give them the best chance. But to answer your question, yeah, it's always a challenge. Every day they bring something new and we have to adjust. So it's been tough, and the lenders are also just getting tight. I had a deal in June that was 7 days from closing, and the lender just decided there was something about the file they didn't like and pulled the rug on me completely.
Wow. And
I had to scramble, and this is where we use a private mortgage as a tool in that situation with a very tight window of time. On a very large mortgage, we had to go and get the funds privately. Obviously not ideal. It was more expensive, but we had a strategy to get out of it. So yeah, it's been tough, and there's moving parts. But that's life, and we adjust as best we can, right?
That kind of leads me to another question about that, because we always talk about pre-approvals, right? So would it be accurate to say that even if this is the way I see it, and you can correct me, is that if you get a pre-approval done, you still have to get a firm approval, which is why you still have to do subject to financing. So it's the pre-approval is sort of like a best guidance in terms of what you can afford, but then you still have to do the firm approval after that, right? Have you seen it where the bank would not approve it even though you had the pre-approval?
Yes, 100%.
You've seen that happen a lot?
I've seen it happen a lot. I'm actually really glad you brought this up, because I think people need to hear about this.
Yes, definitely.
A pre-approval is essentially just a rate hold.
Right.
You've got a bank saying, okay, we're going to hold this rate for you for 4 months, typically 120 days. They do not underwrite or analyze that application with much scrutiny at all at that stage.
Right.
Someone's just looking at it and going, okay, appears to fit our boxes. Here's your rate.
Yes.
There's all kinds of things that can come up once that person actually makes an offer and we submit a formal or what we call a live application,
Yes.
then it starts to get scrutinized in a major way.
Right.
A fine-tooth comb, and all kinds of things can come up that could send things sideways. So again, shameless plug of my industry here, but I think a mortgage broker is so crucial, and a good one with a lot of experience, to be able to navigate that part and underwrite that to know that it's going to be fine, right? And we have to look at all those little details to make sure that there aren't going to be any challenges at live when things go live. And the other factors too is that a pre-approval doesn't take into account the property, right? So a buyer might be pre-approved. That does not mean they can go no subjects or subject free on their offer, because the bank still don't want an appraisal of the property to make sure it's worth what they're paying for it. Right. It's in good condition. The bank's going to want to review strata minutes if it's a condo or a townhouse to make sure buildings run properly.
Of the building, and
you got it. So there's a whole host of things that could go wrong. That doesn't mean we can't be making subject free offers. We can. We need some time.
You'll prepare the due diligence beforehand.
Exactly.
Yeah.
And that's something I know you know that because we work together on that a lot.
Yeah.
And you obviously take great care of your buyers and make sure that they've gone through that due diligence to be able to make a subject free offer.
Right.
Very crucial.
Yeah. So I guess that sort of explains the main factors of why somebody would go to a mortgage broker. Because when you go get a mortgage, you can go directly to the bank, technically, if you wanted to, or you can call up a mortgage broker. What are some of the main differences, in addition to what you just said, on why someone would come see you as opposed to just going to the bank directly?
Good question. So two things I would say on that. I think, the primary and the most basic reason is to save time and money. That's our goal as a broker to the client, is to take one application, one credit check, and be able to go to different banks with it, hold a spectrum of options for them so that they have many and be able to figure out the best fit later, right? But that's what we do in the initial stages, is we hold a bunch of different options, hold a bunch of different rates.
Okay.
Going to the bank directly, that's fine, but you're going to have one option. That's it. If something goes sideways, the bank can't provide a B. Most banks can't provide a B option or a C private option, right? So there's no contingency plan if something goes wrong. Number two, I guess, would be shopping. So multiple banks means multiple credit checks and a lot of legwork that we could take out of the equation for clients and make it simple and hopefully save them some money, because we do have a wholesale relationship with these banks. Scotiabank or TD are probably my top two, for example. We do X amount of millions of mortgages with them a year. They give us a better rate. So typically that rate is better than someone might just get walking in the door as one individual.
Got it. Okay. So back to the whole pre-approval thing. We hear that word a lot, but sometimes we hear the word pre-qualify. What does that mean exactly?
Well,
What's a pre-qualify?
I think a pre-qualify would be, giving someone a pretty firm idea of what their maximum borrowing power is.
Okay.
Right.
So they wanted to just kind of get an idea, but they're not necessarily ready to buy yet. They just sort of in the planning process. Is that why someone would do a pre-qualify?
Yeah, and pre-qualify is very, very much not a formal thing.
Yeah, very informal.
We pre-qualify clients all the time with a 10-minute phone conversation. In a 10-minute phone conversation, I can ask people 5 or 6 questions and give them a very good idea of what their borrowing power is.
Okay.
Then at that point, if that's something they can work with and they're happy with it, we can move on to the pre-approval stage to have rates on hold and just confirm those figures for the most part before they can say, for example, go investing time with you to view properties and things like that. I think that's a key to go through those 2 stages before you do that.
Okay. And what's the typical time frame that a rate is held for on a pre-approval?
Typically 120 days.
120 days.
120 days. Some credit unions can be 90.
Okay.
But most are 120. So it's a decent amount of time to hopefully be out there looking and find something.
Wow. Okay. So given your experience, what's one piece of advice you would give to somebody that hasn't bought before, total first time buyer? What's their best approach on how to tackle something as big of a purchase as this? What would you tell them initially if they called you and said, "I have no idea what to do. Like, help me."
Well, that would be my advice. Would be to do exactly that. To call a broker.
Yeah, because you would be the first point of contact typically for somebody that is trying to buy their first place, because they need to find out what they can afford, right?
In a perfect world, yeah. I mean, what you wouldn't want to see happen is someone investing much time engaging an agent like yourself and looking at all these places, not realizing that they don't even qualify for what they want to do.
Right.
So I do think that in a perfect world, that is the ideal first step, is to contact a broker, find out what your borrowing power is, make sure there's no challenges or restrictions, and that you can have a nice idea of what your price range is.
Right.
And also walk you through all the things you need to know, like closing costs. Make sure you're not caught off guard with a big bill for transfer tax at closing time, right? So I think ideally they consult with a broker and go through that process. They get educated. Then they can reach out to an agent and invest time in looking around, knowing exactly where they stand.
Awesome. So yeah, you heard it here. You got to contact Dara first. And he will gladly help you with a pre-qualify to get you started. So what is in store for you for going forward? Where do you see you and your team from here into the next 5 years? What's the big plans for you and your team?
We are very much by numbers, we're a pretty boutique firm. We're small, and we like it that way. We are trying to grow organically, and we don't want to grow too fast to a point where we're not able to do our jobs to the best we can, as best as we can, right? So, to be honest, I think we just keep doing what we're doing. That's been the foundation of our approach, is to take care of clients. We don't do a lot of internet marketing. We don't do a lot of stuff online and things like that. Marketing or advertising in general, to be honest. I think our goal is to be totally client focused, take great care of people, let that grow the business organically by word of mouth and referrals and things like that. And, we've had great success with that for the last 2 decades. I think we'll just continue on that path and hope that the AI doesn't take over our jobs anytime soon.
That's right. I just wanted to say, I know you're very, very busy, and I really appreciate you being here. I think you hit the nail on the head about, I'm not surprised that you don't have to do a lot of internet marketing, because I've seen you work over all these years, relationship and the importance of nurturing that I know is so important to you. I can't think of how many clients have joked about calling you at midnight and you replying back for a deal that was pretty time sensitive. So I definitely see that with your craft and how important it is to you. And just wanted to say congrats on all of your success so far.
Thank you so much. I want to say first off, likewise, because I so much respect and admire the way you take care of your clients, and I think that's why we work so well together. So thank you for that endorsement. I appreciate it. But yeah, no, it's a pleasure, and thank you for having me. I love talking about this stuff.
Right on. So how do we find you on the internet, though?
We do have we do exist on the internet. Yeah.
Okay. How do we find you?
We may not market. We don't do a ton of social media and stuff like that, but we do have the usual platforms. We should be very easy to find. To find me, myself, it's just my name.com. So DaraFahy.com. My first name, last name.com.
Perfect.
That'll take you to my page. You can access all my contact info there, as well as some informational stuff, educational pieces if you're interested. And our company is citywidemortgageservices.ca. Actually, no, I'm sorry. We're citywidemortgage.ca. We're Citywide Mortgage Services, but our site is citywidemortgage.ca. Again, tons of informational stuff, rates, if you want to check out our rates. And, our whole team is there with bios and things like that.
Right on. Awesome. Lots of ways to find him, so reach out to him right away. Thank you for being here.
Really enjoyed it, man. Thank you again. Awesome. I appreciate it.
It was fun.
Okay. Cheers.